Hello everyone, welcome back to a new weekly market update. Global equities fell last week. That was over AI valuation and uncertain rate cut expectation, which weighed on investors' sentiment, causing bold and gold funds inflows.
Equity market. Black Friday? No, that's not the reason we're dressed, actually. Our director wanted us to look like the Matrix. I don't want my glasses on, but that's what he wanted. Anyways, so pretty much it's similar to what happened last week, what we anticipated. It's the same scenario, just further going more. And that's why it was good to short indices. Let's see how that's looking on charts.
All right, looking at NASDAQ, as we had anticipated in the previous week, we anticipated a consolidation. That's exactly what happened. Found a retracement, multiple bearish confirmations here. Even here we had a bearish confirmation. You could have taken a trade in here or a trade in here for a sell. Your first target would be, of course, support. So from here, we had a retracement. There is a doji from here, which reflects basically strength on both sides. So normally, what we want to see NASDAQ is doing, moving within this healthy trend to the downside. So what we want to see is something like that, possible, or could fill somewhere around here and continue to the downside. However, we do have bullish strength in here to push it up. But also, as I said, however, we have very strong bearish sentiment, which technically is obvious. Also, fundamentally, we've highlighted in the past week about the legend shorting about $1 billion in AI-related companies, and also in general, investors are doubting or uncertain about rate cuts, etc., etc. So they shorted. So fundamentally, it is bearish. Technically, it is bearish, even though we have some bullish strength from this end, but it is bearish. So you ultimately want to look for a short entry. But because of that and the doji here, we might see NASDAQ consolidating for this week within a tight range, because this support, if you go to a higher time frame, is actually a major support. So we do have strong bearish interest, but also it's a big demanded price on a bigger time frame. Hence, we expect this to consolidate a little bit before a continuation in a healthy trend. So that's about NASDAQ. Let's go into gold. All right, looking at gold, as we have anticipated in the past week, it did consolidate within, okay, not exactly the range that we had anticipated. It went a little bit above and a little bit below. And the reason for that is gold is bearish technically. It had to retrace. We should see a correction in the market. However, due to the volatility, or let's not call it volatility, due to the fear and uncertainty in the stock market, we found a lot of buying pressure on gold, which kept it consolidating, but got volatile a little bit here and there. So on a bigger time frame, we can see that gold has retraced, right, as in a bearish movement. So this is what optimally we would want. However, because of the uncertainty in the stock market, investors shifted into gold, and we have some sort of bull flag here. So it is still, I would say, almost about the same in pressure, where buyers and sellers are there. It's just consolidating, and we have some sort of symmetrical triangle that, okay, not necessarily symmetrical triangle, but whatever it is consolidating. So we can expect a further consolidation. I wouldn't really recommend you going for a medium to long-term trade on gold unless it breaks below one of these two levels, either this major support or above this resistance of the downtrend. Yeah, any other thing in between, rather for you keep it short-term, low risk, and don't count as much on it. Yeah, so that's about gold. Let's go into Bitcoin. Looking at Bitcoin, it did reach exactly as we anticipated. Also in the previous week, we saw some retracement and it reached to 94 as we expected. However, it crashed below. As I highlighted, a lot of people are having this understanding that, or let's say analysis or expectations that Bitcoin might reach to 66,000. And I did highlight in the previous week that's not necessarily the case, and my personal sentiment on Bitcoin is still bullish. But here's what: don't buy just yet as a recommendation, not necessarily as a trade or any financial advice. So what I believe is happening, I still believe in the same vision for Bitcoin I highlighted like a month ago for you guys if you're following up with everything. So what's happening right now is that they're liquidating Bitcoin. And for me personally, I see Bitcoin is the biggest asset on the planet that whoever is trading it, they just love liquidity, right? So because of that, they're pushing it further down to get a better entry for a long term. And that's, of course, how every other market forms. So Bitcoin right now is still bearish. We did have a lot of reasons why Bitcoin should retrace. So we have a reason here why it should retrace, right? To make us a healthy trend. Still, it's pushing further and further volatilely, or if that's a word, in a volatile way to the downside. So it's not really optimal to take a short from whatever it is. But if we see some retracement to this inner support and we get a confirmation, you could take a short trade for a short term also. So what we're ultimately looking is a confirmation on a higher time frame, not necessarily backed up by a fundamental reason at the same time that we get it by technicals, but if we get it mutually, then that would be perfect to go for a long-term trade in Bitcoin. So it could be a trade and an investment, or call it as you wish. So ultimately, if you are still a beginner, definitely recommend you to stay away from it for some time. Don't trade Bitcoin, yeah? So if you have some experience, then of course you could definitely manage some opportunities doing out in and out the week. So that's about Bitcoin. Let's go into Nifty 50. Looking at Nifty 50, exactly as I've highlighted in the previous week, we had multiple areas, multiple reasons, multiple trading setups to go long, and we've highlighted that Nifty 50 is going to attempt breaking above all-time high, which was what's most likely to happen. That's exactly what happened. We had a very beautiful move to the upside, which was very easily utilizable for those who trade Nifty 50. So the current situation is we have a very organized uptrend. However, we had a failure to reach to the trend line itself. From here, market fell down, and we have some sort of descending triangle at all-time highest. So true market is at support, but notice did not reflect at support, even though it had enough of volume on this let's say medium time frame, where it should have pushed it up if there is interest in purchase, but instead we got some small dodgy. So what is most likely to happen is Nifty 50 wants to grab some retracement correction, so we could find Nifty 50 actually falling to this range, which is going to be from the demand zone support and the FVG and the liquidity. All of it is within this range. So if we get, after retracement, some confirmation within this range, you want to look for a long entry. And possibly, all right, this time we're not gonna expect a break above all-time highs. Keep your target in a safer place, which is a retracement to the inner resistance, right? Very simple, very direct, very clear forward. Not financial advices, of course. It's recommendations, analysis. Do you, and remember to hold to strict rules in risk management. That's about Nifty 50. Let's go into eurusd. Now, we did expect a movement to the downside, then a retracement on eurusd in the past week. Here's what happened. We have different fundamental reasons. So these fundamental reasons, they both affected the same effect on NASDAQ. However, eurusd did something different. So what I'm talking about is the AI companies being overvalued should cause the dollar to weaken, all right? However, because of the interest rate cut, more sentiment now that there will be no interest rate cut by December, these investors are feeling more confident in the dollar. So fundamentally, we have different factors to cause EURUSD to go up and down, which was what we were anticipating in the past week. However, the sentiment ultimately was more bearish on EURUSD. And most of the time, we find somewhat of a similar move between EURUSD and gold. Aside from the last 2 years, it's not necessarily a rule, but that's what the case is. So we do have that sentiment also mutually on gold. As I've mentioned, it should be in a bearish sentiment, but we have investors, because of uncertainty, buying gold. That's why we're seeing consolidation. However, in EURUSD, we got it as in a bearish move. So it continued even further down. So from here, we can see that there is weakness in pushing down below this support on this time frame, and also you can find this support on a higher time frame, which is actually a demand zone. So from here, minimally we can expect a consolidation or a retracement to the inner resistance. From here, we can expect a continuation, or market could possibly hunt some liquidation. So we'll see by next week where that goes, but for a shorter period of time, which is the upcoming week, we better be looking for some short-term long entry on Euro USD. Again, not a financial advice. So that's about it for Euro USD. Samer Stan is here. You have any question about a certain asset you guys want to see more of analysis upon it, feel free to write it down in the comment section below and we'll have it considered to analyze by the next week.
Thank you, Samer, for sharing insightful information regarding the technical analysis. Here is Amir Amidian, Master of Finance student in the UK and Senior Financial Market Analyst at Zylostar. As you can see here, it's autumn in the UK and it's almost rainy every day. Exciting turbulence in the financial markets last week was indeed same as unpredictable weather in the United Kingdom. I want to start our market update this week with the prior week economic indicators. Last week, after a long period of government shutdown in the US, eventually we got the non-farm employment numbers, which is one of the most crucial indicators for the Federal Reserve regarding the interest rate decision making. It was strongly higher than expected, and the US payrolls came out by 119,000 in September, showing almost no momentum since April, while the unemployment rate held at 4.4%, with only modest shift across worker groups. Hiring came mainly from healthcare, food services and social assistance, while transportation, warehousing and federal jobs fell and prior months were revised down a combined of 33,000. It all led to a speech by the Director of National Economic Council of the United States, Kevin Hassett, to mention employment status is much stronger than expected and totally helped the dollar to gain momentum as market participants were expecting less hawkish stance by the Federal Reserve in the future, or let's say upcoming meetings. Last week, at the middle of the week, we got the Fed minutes, which showed policymakers were divided over the need for additional rate cuts, with several members warning that inflation remained too high for a December move. Officials also indicated broad support for ending quantitative tightening earlier than expected to prevent financial market stare. From the Canada, inflation is in October, with CPI rising 2.2% year over year, down from 2.4% in September. The slowdown was mainly driven by sharply lower gasoline prices, while grocery price growth also moderate. Excluding gasoline, inflation held steady at 2.6%. Monthly CPI increased by 0.2%. From the United Kingdom, retail sales volume dropped 1.1% in October 2025, the first decline since May, following upward revised growth in September and slight growth in August. The fall was driven by weaker sales in supermarkets, clothing and mail order retailers, with many retailers noting that consumers delayed purchases ahead of Black Friday. November's flash PMI shows the US economy is staying strong, with growth around 2.5% analyzed and gains across both manufacturing and services. Business confidence is looking up thanks to hopes for rate cuts and an end to the government shutdown. On the flip side, manufacturers are seeing slower new orders and rising inventories, and higher costs are putting some pressure on prices, something to watch in the upcoming month. UK private sector growth slowed in November, with services losing momentum and new work declining for the first time since July. Manufacturing saw a modest boost in orders, supporting a slightly higher production. Output price inflation fell to nearly 5 years low, while input costs rose and firms cut jobs more sharply amid uncertainty. Overall, the PMI points to a stalled economic growth, weak business confidence, and potential for interest rate cuts in December. as firms struggle with demand and pricing pressure. From the corporate earnings, NVIDIA smashed expectations with record AI-driven data center revenue. A strong earnings and bullish guidance, though margins faced pressure and export restrictions. From the other side, Home Depot posted modest sales growth but missed EPS estimates, citing a weak housing market and softer demand, leading to a cautious profit outlook. Let's have a look for the upcoming week. Next week is going to be filled with different inflation gauges such as CPI, PPI, and PCE for the United States, plus Australian dollar CPI. Worth to be mentioned, at the end of the week on Friday, we are going to receive GDP for the Canadian dollar, and at the middle of the week, retail sales number from the United States and autumn forecast statement from the United Kingdom. Stay tuned with Zylostar. See you next week.
Thank you guys for watching. Have a good weekend and see you next week.